So joining us on India Business Hour, it is a red letter day for India's oil and gas sector and for India's economic reform agenda as the government took decisive steps towards decontrolling fuel prices. The empowered group of ministers has freed petrol from price controls. Diesel prices will be market determined, but that will happen eventually. As of now, there's only been a 2 rupee hike for diesel prices. Harsha.
In petrol prices will rise by 3.5 rupees per litre. Diesel, as you said, will rise by 2 rupees per litre. LPG prices will rise by 35 rupees per cylinder. Kerosene prices have been hiked by 3 rupees per litre.
Yeah, but the big question, Harsha, on everyone's mind is when will the government align diesel prices to international market prices, and what about the compensation formula and the subsidy sharing mechanism? Nenta Rai caught up with the Oil Secretary Sundareshan and asked him all of those questions.
Well, to talk about a hike in diesel price would not really be appropriate. What has been decided today is to really let the price of diesel and petrol float with international changes in crude prices. In the case of petrol, the under recovery today is of the order of about 4 rupees 50 paisa. This will be passed on to the consumer as of midnight. And after some time, if there is a reduction in international prices, the consumer will get the benefit of that. In the case of diesel, also the under recovery is of the order of rupees 370. So the EGM has taken a conscious decision that there is no need to pass on this entire burden at this juncture to the consumer. The present hike will be of rupees 2.
But by when will diesel prices float with market prices?
Well, we have not taken a final decision on that. Let's see how things go.
Therefore, you're saying the oil marketing companies are going to be left on their own to decide however often they want to change it and by how much they want to change it?
Well, they would have to work on this. The whole point is that petrol being a very sensitive commodity, you cannot announce in advance that the petrol price is going to be changed on a fixed day every month. This would have to be, there have to be a little flexibility on that. And we will work on this as we go along.
For example, we see ATF prices being reviewed every fortnight, so that's not going to be the case with petrol.
Well, petrol is far more sensitive than ATF in terms of its access to individuals, problems of hoarding that could be there. So we have to take a rational view on that, and we will do that as we go along.
So has the government now left the oil marketing companies all on their own, petrol for now and diesel later? At some point, if you think crude levels have reached too high, the government will look to intervene.
Well, this is one of the specific decisions of the EGOM that in a situation of high volatility or in a situation of very high rise in prices, the government will intervene and will modulate the price of petrol and diesel.
But what has been defined as those high levels?
Well, that's a call we'll take as we go along.
There's still going to be under recoveries of 53,000 crore rupees. How is that going to be shared? Is there any mechanism that has been come out with, any formula as such?
The EGM has also decided today that the under recoveries of oil marketing companies on LPG, kerosene, and the under recoveries already incurred on petrol and diesel would be compensated. The Ministry of Petroleum and Natural Gas will work out a mechanism for the burden sharing with the Ministry of Finance after discussions with the Ministry of Finance.
So there is a possibility that perhaps upstream companies will now be sharing the burden on auto fuels and cooking fuels?
So they've always been sharing the burden on under recoveries. For example, the year before last, which is the total figure we took, out of the 1,02,000 crores, about 32,000 crores was shared by the upstream. Last year, a decision was taken that the under recoveries on petrol and diesel would be borne by the upstream companies and under recoveries on LPG and kerosene would be borne by the government. Now today we will take this as a whole package of under recoveries that are available because for the first 2 months, for the first 3 months there were under recoveries on petrol too. So the decision today is that they would be compensated. The mechanism of compensation would be worked out by the Ministry of Petroleum and Natural Gas in consultation with the Minister.
Well, that was the Oil Secretary. Joining us is a power-packed lineup on India Business Hour tonight. SHARMA, Chairman and Managing Director of ONGC, KIRIT, PARIKH, author of the Oil Deregulation Committee report, Pandey, former Oil Secretary and stock market expert, SP Tulsi. And gentlemen, many thanks for joining in. Mr. Sharma, let me start with you. You must be a relieved man today, but do you have any clarity on the subsidy sharing mechanism? Any clarity from the government on that?
This is a much awaited and long overdue relief for the industry upstream as well as the downstream. First of all, the marketing companies, they get a comfort, and indirectly, because ONGC used to take the biggest hit on this all this subsidy sharing formulation. So we feel that this should give a lot of relief to us. So far as the mechanism of sharing the under recoveries, it was not expected for EGOM to take a decision on that. Based on the decision that they have taken, so this balance under recoveries will be worked out, and then thereafter the formula or mechanism for sharing these under recoveries between the government in the form of cash subsidy or the oil bonds, the downstream companies and the upstream companies in a more equitable and fair and equitable manner will have to be worked out. I am sure this will come. That is not something we were expecting to get it today, and I quite agree with Dr. KIRIT PARIKH that these nominated blocks that we have, we don't have any production sharing arrangement with them. So the government, they have the right to ask us to that share some of the upsides, especially when the crude prices are going up. So I see nothing wrong in that. I'm very much comforted, at least the uncertainty, the ad hocism that has been there, that will get addressed to a large extent now.
All right, the uncertainty is over, Mr. Sharma, but of course question marks still remain on the subsidy sharing mechanism and the compensation formula. But Kirit Parikh, you're a lucky man. Let me begin by asking you about duty restructuring. Now, we've heard the Chief Economic Advisor as well as the Oil Secretary saying that there is no case for recalibrating duties at this point in time. In fact, the Oil Secretary saying it wasn't even discussed by the empowered group of ministers. Do you think this issue of duties needs to be addressed at this point in time, given the fact that the government has moved ahead on some of your recommendations? This, of course, was not perhaps, in a sense, directly addressed by you in your report.
We had not recommended any duty restructuring. We had recognized that there is an empowered group of state finance ministers which is looking at rationalizing tax structures. So one should wait for that. In any case, there is one has to recognize that the differential duty on petrol and diesel, we have, that there is a 14.5 rupees tax on petrol, whereas duty on diesel is only 4.5 rupees. That can be justified on a number of grounds. One could say that duty on petrol is a luxury tax. People who are driving cars, people who are driving motorized vehicles are relatively better off people in the society, and this is a luxury consumption for which they are paying some additional tax. Whereas for diesel is really used as an intermediate product by trucks, for transporting goods, by buses and by industries. So there is some real reason for not taxing diesel as much as petrol. So I don't see what people say that we should rationalize. Of course, there is one argument one can say that, look, reduce the tax on diesel or rather petrol substantially and raise the duty on diesel marginally to be tax revenue neutral. And that would at least then you can leave the choice between diesel and petrol to the market.
R.S. Pandey also joins in this conversation. Mr. Pandey, how have you read the government's position in principle on agreeing to free up diesel prices eventually?
Well, we must compliment the Ministry of Petroleum and Natural Gas. A very decisive step amidst all kinds of difficulties. The petrol prices have been freed, totally deregulated. And if you look at what happened some time back, very recently the administered prices for gas also were revised upwards to go to 4.20. I think these two steps are clear, decisive steps towards reforms in this sector, and therefore it's a job very well done. Secondly, it perhaps has not been possible to deregulate diesel prices as of now, but some revision upwards in the diesel prices, kerosene and LPG prices have been affected, which will bring down the under recovery to some extent. And under the circumstances, that could be the balance between the consumer's requirements and the need for protecting the exchequer, etc., and also the needs of the oil marketing companies. So on the whole, a good job has been done today.
Well, it has been a balancing act, but Mr. Sharma, let me come back to you. We've been talking about the subsidy sharing mechanism, or the lack of it at least at this point in time, but do you have clarity now on your subsidy burden and how much that's going to be reduced on account of the moves being announced today?
again, you see, anybody, giving a clarity and number on that, I don't think that would be realistic. Because after this, it will have to be seen that first of all, it will be seen how does it impact the marketing companies, how does it impact the upstream companies, the total under recoveries. Please bear in mind, all these numbers that have been given by Secretary Petroleum, they are based on the assumed crude oil price of $75 a barrel. We know that crude prices, they have been very, very volatile. So one has to work out a dynamic scenario and see that at various price levels, what are going to be the under recoveries with these the pricing, and that who's gaining, who's not, that losing in this. So on that basis, when I use the word fair and equitable manner, that manner will have to be worked out, and I feel let's wait and see, and we'll have the clarity soon.
It's still over 50,000 crore burden, Mr. Pandey. This is a necessary and welcome respite for oil marketing companies, as Mr. Sharma was pointing out. Does this, in a sense, make the financial position of the oil marketing companies better?
ONGC did submit a formula to PARIKH committee. The committee itself left it to be decided by the government, and this is what today also came out, that the Petroleum Ministry, in consultation with the Finance Ministry, will work it out. But since the total burden of under recovery is now estimated to be a little over 50,000 crore, it should be relatively easier.
It will be relatively easier given the fact that it's now 53,000 crores and not in excess of 70,000 crore rupees. But Mr. Tulsian, let me come to you. This is a big leg up for the oil and gas sector. We saw those stocks rallying. ONGC, the star performer, up almost 6% today. How do you think the OMCs are going to be reacting to this news in the long term? Will there be renewed interest now coming into the sector?
Overall, definitely positive for the sector, and that will lead to better valuations of the upstream companies like ONGC and Oil India. But honestly, if I take a look at the oil marketing companies, in fact, I am seeing the liquidity positions getting eased out for these companies and not any increase or accretion in their profitability, because whatever under recovery they earlier had, were getting recovered either from the government or from the upstream oil companies. Only thing, they had a time lag for which they need to, earlier borrow money from the banks. That was, leading their increased borrowing, and eventually the oil bonds, which they were getting in discharge of the under recovery, were getting discounted. So this is more of a liquidity ease for oil marketing companies. And if you take a valuation call on that, I don't think that an increase of more than 10% is justified for oil marketing companies of stocks. And that kind of rise we have already seen, happening in today's market. Yeah.
Mr. Tulsian, what about upstream oil companies? Do you expect them to get a significant upside?
No, that's what I said, that my view is quite positive on the upstream companies, because ultimately part of this auto fuel subsidy was shared by the upstream companies. Maybe the cooking fuel subsidy was, taken, absorbed by the government. But definitely this will be a big relief for the upstream companies. They may have to share less, because increase in petrol and diesel prices will result in the lower under recovery in case of the auto fuel subsidy, and that will be seen as positive for the upstream companies. Stocks. Yeah.
Yes, but there still continues to be a question mark, Harsha and Mr. Tulsian, on just exactly what that compensation formula or the subsidy sharing mechanism will be. But Mr. Parikh, another area where there is a question mark is where the government says that it will intervene only if the surge in crude prices is too high. Now, they haven't talked about a range. They haven't talked about what constitutes too high. What, according to you, is too high? Couldn't there have been a price ban or a mechanism put in place to define this?
Yeah, I think I certainly agree with you that this is a bit of an uncertainty that has been created. I would have liked to see that the government would have said that, look, set a price ceiling that above 100 or below $110 crude price or $120 crude price, we would not intervene. That would have given more comfort to private oil marketing companies if they want to come into oil marketing business, and would have reduced some of the uncertainties that this current pronouncement creates. It is very difficult to say what is the level at which you consider the volatility is too high. You might have said, look, at any given moment of time, we don't want price to increase by more than 1 rupee or any moment of time we don't want price to decrease by this. That could have been said, but I think my feeling is that it is best to leave these decisions to the companies, and they can react and learn how to deal with volatility of the international prices, because people do deal with volatility of various kinds on their commodities, steel, cement and other things, and I think one can learn to live with petroleum products as well.
All right, gentlemen, we'll have to leave it there. Many thanks for joining us this evening on India Business Hour. Mr. Parikh, Mr. Pandey, Mr. Sharma and Ms. Tulsian, thanks so much for joining us on this show indeed. Coming up next on